Hello and welcome to Yadnya Investment Academy. Today we are going to talk about the term free float market capitalization. Recently we have started reviewing index funds and ETFs on our website called investyadnya.in, which has the most comprehensive and transparent mutual fund reviews, and now have also added index and ETF reviews in this portal. It has also the most comprehensive data on mutual fund industry. So when we were talking about or reviewing index funds and ETFs, we came up with this term called free float market capitalization very frequently in the methodology of how the index in India are created or are regulated or reviewed. So let's talk about this free float market capitalization in detail. The first is, before going into free float market capitalization, we should know what is market capitalization. So market cap is short of market capitalization. It is simply multiplying the company's shares outstanding by the current market price of one share. So total number of shares which a company has created into the current market price which is being traded on the stock exchange is the market capitalization of the company. So suppose ABC Limited is a company which has 10 lakh shares outstanding or created total number of shares and is currently trading at suppose rupees 90 in the stock index. So the market capitalization will be 10 lakh into 90, which is around 90 million or 9 crores. So that will be rupees 9 crores will be the market cap of this company. Currently the market cap, highest market cap in India is of Reliance Industries, second is TCS, and third is SDFC Bank. So these are the biggest three companies in terms of market capitalization only. So from TCS perspective, if you see the market cap as on 18th April was, we got this screenshot from BSE website, and these are the total number of shares which are held by promoter of TCS, and these are the total number of shares which are held by public. So total number of shares which has been created by TCS company is around 375.23 crore shares. So here is the number, and current market price as on 18th April was 2149.25. So total market cap of the TCS on 18th April was 8.06 lakh crore rupees. So this is how market cap works. Now let's understand how free float market caps work. So free float is also called float adjusted market cap. So the difference between free float and normal market cap is that in free float market cap, only the shares which are not locked are considered in free float market capitalization calculation. So basically share price into number of shares total issued minus the locked shares are removed. Which are locked shares? Locked shares are the shares which are held by promoters or employees in terms of ESOPs etc. are locked shares. So here it is calculated by current market share price multiplied by number of shares readily available for trade in the market. So only the shares which are available for trading in the market are considered in free float market capitalization calculation. So these are the shares which are excluded from free float definition. These shares are excluded of shares held by founders, by bodies with controlling interest, by government holding through FDI route etc. So all these shares are excluded from the calculation. So here is the difference. So this is basically tells you the full market capitalization. So suppose a company has 10 shares and per share is suppose 100. So full market capitalization will be rupees 1000, 10 into 100. But suppose out of these 10 shares, 6 are held by public and 4 are held by promoters. So free float will be 6 into 100, which is the current market price, and 600. So free float market cap will be lesser than overall market cap of the company here. So if we now see the TCS example which we took earlier, here around these many shares are held by the promoter of TCS. So these are locked shares and will be excluded from the free float definition. Only shares held by public which are this much 104.88 crore shares are held by public, so this will only be considered in the free float definition. So total free float shares is this multiplied by share price, and this is rupees 2.25 lakh crore is the free float market cap of TCS, which is significantly less than total market cap, which is around 8.06 lakh crores. So why this free float market capitalization concept is there? So actually both Nifty 50 index and Sensex, they are based on free float market capitalization methodology. So they select the stocks and their weights based on free float market capitalization only, and not on total market capitalization, which is very interesting. So if we see free float market capitalization, the market free float index, they are more better representation of the market, because they move they are more rational, as there is more public participation in free float, right? So because 100% free float is traded in the market, so it is therefore it is more better presentation of the market. Free float methodology makes the index more broad based by reducing the concentration of top few companies, and also removes the company which have very small equity percentage traded in the market, and focus more on the companies which are more market driven. So I'll give you some of the examples here. Suppose like TCS, which is the second biggest from market cap perspective in India, but if you will see its weightage in the Nifty 50 or Sensex, it is almost at 6th or 6th rank I think currently, and its weightage is around 5% in the Nifty 50 index, which is headed by, which highest is SDFC Bank, which is actually the third biggest, but it has around 11 to 12% or 13% weightage in the total index. So you will see that. And similarly Hindustan Lever, which is I think fourth biggest in terms of market cap in India, but if you will see on Nifty 50 index, it is around 8th or 9th rank, right? So because there is a big promoter share in the companies like TCS or Hindustan Lever, and therefore their free float market capitalization is lesser, and hence their share in the Nifty 50 index is lesser. Whereas companies like SDFC Limited, which has 100% free float market capitalization, SDFC Limited is 100%, so therefore it has higher percentage holding in the Nifty 50 index or Sensex than the companies like TCS or Hindustan Lever. So that's why free float represents the market better. It is it is more market driven. So that is all we have on this topic. We have various products and services which we have launched based on you guys feedback and comments on various videos, and it is very comprehensive product structure we have created, where you can find lot of things which you will need. It is like more education based content. You can subscribe it at very low cost. You can go to our main website at investyadnya.in, and you can find details of all these products as well. We have also launched eBooks at rupees 25 as well at this website. You should definitely check it out. So that is all we have on this topic. If you have any question, please do write in the comment section below. You can also write us on this email address or call us at this to know more about our products, or to understand anything, any personal finance query you have. You can always call us or email us as well. And do check out our new MF Yadnya portal, where you can find more details about free float market capitalization, index funds and ETF reviews. That is all we have on this topic. Have a great time ahead. Jai Hind.